wanted us to look at Netflix. And again, we're sitting here with a possible triple top formation. And this gives you a good indication that the downside in the US market might not be over yet. Even if you look at some of the technology stocks, and you can see, Casper, even tail after tail, long upper shadows on my candles, which tells me profit taking is still taking place within the bounces, and that might be a possible short opportunity if you are keen on one. So you can either use $416.08 as a possible stop loss, wait for, if you want a textbook trade, wait for the candle to close, see if it is a negative candle, and then below $361.32, you can consider a short position, and then have a look at that 40-week moving average. What does my share do on a Friday close when it reaches the 40-week moving average? And that is waiting at $321.80. If it changes that level into a resistance, the long-term sentiment changes to negative. But the big test there, Casper, will be when $252.29 changes into a resistance. And as I've mentioned before, triple tops, double tops, tweezer tops, those are formations, head and shoulders, those are formations that should not be ignored. So here we had a little bit of a pullback and a bounce. So should the share retrace even further, the next lower high will also be confirmed. And when that support, 252.49, changes into a resistance, that triple top on Netflix will be confirmed. And then almost I'm too scared to show what the possible target are. But let's show our viewers what the possible target. And I'm going to take the conservative leg of this triple top. If I take the length of the leg and I project it downwards, it tells me that the Netflix share can go back to $123.26. It doesn't mean the full target has to be reached. It can do it in pulls and retracements. It doesn't go down in one line. But that is a possible target for the Netflix graph should this triple top formation play out. Ashraf wanted us to look at Zoom. Now we know with everybody working from home, Zoom is the platform that everybody is using at the moment. And I think this was a beautiful graph, Ashraf, to highlight, to show that to buy on an idea that this share price has to rise because everybody is using it doesn't necessarily mean that will be the case. Because you can clearly see, it's a newly listed share. They're only listed on the New York Stock Exchange in the US on the 25th of March 2019. And that 40-week moving average is incorrect. You can't use that because there's not 40-week in the share yet. But take a look at that candle of the 16th of March 2020. That has got a massive upper shadow. The high of that candle was around $80, more than $59.75, came all the way back, and we're trading at around $10.40 again. So that tells you that definitely the sellers are actually more keen in this stock at the moment than the buyers. And with these long candles and long shadows, it's so difficult to identify a stop loss level because you can almost not identify support and resistance levels at this stage. So if you want to accumulate, I would only do so above $20.78. Stop loss that you can use is $3.63. Again, a massive stop loss. And then hopefully you can use psychological round numbers maybe as possible targets to the top. That high there around 59 or let's round it up $60 has happened in 1 week, which makes it a very difficult share to trade, Ashraf. So I'll be a little bit concerned about it at this stage. Mohammed wanted us to look at Blackberry. And we can see, they reported good revenue results, couldn't really give a forecast for 2020. But at the moment, Mohammed, we are sitting here with a beautiful descending channel. And I'm saying beautiful because a descending channel is actually a positive formation, only when that upper band changes into a support. And also take note how closely that 40-week moving average is weighting to that upper band, which highlights the importance of that level. And if I project it, that level is weighting there around $5.36, where that upper band might change into a support. But we can see time and time again, it tested it, retraced, tested it, retraced. So to make sure that you don't get sucked in and just spit out, maybe wait for higher lows, confirmation that the share is bouncing in weakness. So what I mean by that is for the share to bounce, retrace a little bit, bounce again, and make sure that that support level is a little bit higher than the previous support level. and again bounce, retrace a little bit, bounce again, and that support needs to be higher than the previous support, and then you have higher lows, and that is a good indication for that the informed capital is nibbling in the pullbacks. And then obviously that formation will only be confirmed when that upper band changes into a support. But the long-term sentiment, again, that 40-week moving average, and that is waiting at $5.97. If I zoom out, you can see this stock is coming from an extremely low base. I mean, this was a share that traded around $146 back in June 2008. But we know technology didn't keep up with the times, might be the reason why this share is lagging. But at the moment, this dragonfly candle on the 16th of March tells me it can be a good indication, but as I've said, wait for the higher lows. Your first buy opportunity would be above $4.24 if you want to wait for confirmation, Muhammad. Stop loss you can use is $2.65. Again, massive stop loss level there. But those are possible opportunities you can use to buy and accumulate Blackberry. Peter wanted us to look at Tesco. They're listed on the London Stock Exchange, on the FTSE, and at the moment, everybody is looking for food stocks because we know, if we don't do anything else, eat that we have to. But at the moment, I'm a little bit concerned about this Tesco graph. Peter, that 40-week moving average was tested around 237.4 and it remained a resistance, and that is seen as negative. So technically, I would want Tesco to first start to consolidate above that level before I would feel comfortable to buy the share. And again, if I zoom out, you can see that this stock is actually coming from high levels. So try to find rather shares that have been beaten a lot more with low P's and better dividends, and then try to accumulate from the bottom. I would be very careful to buy a share around these levels, coming from such a high base with lower highs and a possible triple top, although that might be a false break in the making. We can only assume that the negativity or the possible pessimism will be wiped off the table above the 40-week moving average, and then when that 259 pounds changes into a support. Only above those levels will I feel a little bit more comfortable about Tesco, thinking that the momentum to the top can escalate again. And then when these support levels around 212, 208 and 189, when those levels start to change into a resistance, I would be very concerned about the Tesco's graph on a weekly basis. Susan wanted us to look at Johnson & Johnson. One of the shares that are working, or companies that are working on a possible vaccine. And again, Susan, look at how the share tested that 40-week moving average this week. It tested it around $136.11 and retraced from it, and that is seen as negative. So when a technical level gets tested, whether it's a strong resistance or support, or a moving average, and it retraces from it, and it can't change it into a support, we refer to it as a technical negative goodbye kiss, because it's just saying it's goodbyes and retracing from it for more downside. So this might be a negative technical goodbye kiss. So even all the positive news around this company, coming out with a possible vaccine, that technical goodbye is on the 40-week moving average, Susan, is a concern for me. And then if I zoom out, you can see I've drawn in here a possible megaphone formation. And again, that megaphone formation can become a jaws of death if this lower band, waiting there around $108.69 changes into a resistance. When those levels start to change into a resistance, I would be very concerned. And even more importantly, there's also another double top formation in the making here. And that double top, and I just want to make sure that we count as many touching points as possible. There you go. That looks good. If that level changes into a resistance, that double top formation, and that is waiting there around $126.54, can take it back to these lows. And then the big test is, will this lower band remain a support, or will it start to change into a resistance? So it just shows you once again, like within the Zoom graph, the possibility of optimism and a possible positive outcome doesn't necessarily, result in a positive share price. And that is very clear again on the Johnson & Johnson graph. And again, if I zoom out, it's actually coming from very, very highs. And these long candles makes it very difficult to trade the instrument if you want to use a stop losses. Kevin wanted us to look at Harmony. Again, a gold share, keen to be bought by the South African market. But Kevin, my 40-week moving average has changed into a resistance, and that it weighted around 46 Rand 43. And that was the first bell that this long-term sentiment towards Harmony has changed to negative. The second concern was the fact that this rising channel have maybe confirmed a bearish flag formation. So when that lower band changed into a resistance, it immediately pulled that and it confirmed the target of that flag formation and took the share as low as 30 Rand 79. Ever since then this week, it could not change that 40-week moving average or even that upper band or lower band on the formation, waiting at 45 Rand 34. It could not change that into a support, and that is seen as negative. So will I trade this stock at this stage? No, I won't. I would be very careful to short it. It is oversold at the moment, but maybe if you want to accumulate to do so in very small pieces, use these levels around 34 Rand 73, 33 Rand 73, 31 Rand and 8 cent as possible stop loss levels. Those are strong levels that you should take note of, because should the gold price retrace even further, because it is so toppish at the moment, this share can even go back to previous levels that we have not seen yet recently. And remember, there's a window open on Harmony, and that is between 25 Rand 28 and 25 Rand 60. And we know the rules around windows are they always get closed. It can take months, days, decades, but that window at some stage on Harmony must get closed. Please feel free to watch us next week for more questions. Hope to see you soon. Take care.